it's already been 2 months for the year 2014, and it looks like we are going to go higher. I think so too. I mean, last week we did say, let's going back to my notes here. This was Friday, Thursday, Wednesday, Tuesday. We have what this called absorption bar, and market has to break higher. I was looking market to break. It did, you know, on this day, but we did have a sell-off here, which I think was a good thing. This sell-off, if you notice, the volume here isn't that significant. Okay, so having said that, yeah, Maybank is due for Q4 good result. That's right. So we have a 2-bar reversal here. This seems to be pushing up, and now at this junction we call this. Let me just highlight this, which is the best. When you highlight this area here, you notice the volume was just moving sideways. We were looking for absorption in here. You notice there was a narrowing here, and the market has to break higher. But this was a nice shakeout. The weak hand holder, okay, the weak hand holder that came in and so-called tapered off the market, and then the market came back and rally up. And also there is strength coming in today because we've seen market gap down and finally marking up higher. Okay, so it's 1836 in here. Again, last week notes on 21st February, we said that KLCI must break higher, and if it doesn't, it looked pretty worrying. So far, I thought we were going to see a sell-off here at 1820, but having said that, the market came back and arrested. Now, on the weekly basis, you can see this is looking pretty good too. We got 1, 2, 3, 4, 5. We already have 5 bar, okay? 5 up bar corrections are looking to come in, 1840, 1836. Now, last week, let me just make a note here. The resistance level, okay, seems to be at 1836 level in here, okay? That's the one, 1836. If we can break through the 1836, 1840, we should see higher, but that's going to be getting a pickup from the US Dow Jones, a bit of Q from that. Oh, hi Tech, good to see you again. All right, so that's the side we are looking at. Now on the FBM 70 here, good. You see this bar here? That's a 2-bar reversal in here, holding up nicely. Meaning, you know, if you buy the oil and gas, those really low value hasn't run yet, looking for line change, that's the one you want to be getting in. You get a lot more if you have the VSA filter and run it. For those of you who is interested to get a copy of it, we have it on April 5, 6 and 7. We'll be doing the course and you get a copy of it. I will be also doing the preview for the Master the Market course on next Wednesday. I apologize, I haven't sent out the preview yet, so you can actually take a look from that one. So this looks to move back up. Very nice one in here, pretty clear. We have SOS in the background, and if it clears back to 14,100, I believe it should be, then we'll see poised to go market a bit higher from then onwards. Okay, now we done that one. Let's go on to the foreign funds. Now foreign funds, like it or not, happy birthday. I want to say happy birthday, but what we're saying that, look, finally, you know, we have 2 small occasion, 2 very short occasion in February where the market seems to turn green. Finally, net buying. We are saying that, look, liquidity did dry up. Emerging markets, they have lost close to about 11.5 billion. Emerging markets is a big market, including China, Brazil, Thailand. Malaysia is just a very small market in here. Having said that, I believe Malaysia is one of the better quality too, although at times we tend to be lumped up together with Thailand. So that's always been a problem. You know, Thailand's problem, you got shooting. I was just watching the Channel News Asia. You know, things are not looking very healthy. They are trying to get Yingluck out from her job, the cabinet. But, you know, investors are fleeing the market. The question is, when will this market recover back? But Malaysia, at this junction, certainly looking very healthy. You can see we have 2 green here, right? And also the up bar, right? You see here 1 and 2. So the daily net buying are turning positive. So you look at Post. Post is one of the favorite by so-called Aberdeen Asset Management. And when they come in and buy, they will definitely buy Post, Aeons, and that list goes on. I think some of you did have that counter from me, some of the previous outlook. Now, okay, done the foreign funds. Let's look at the regional market now. Okay, let's look at Singapore now. Mhm. Now this is Singapore. Let me just put in the 200-day moving average, which is one of the critical thing that I look at. It is still far down from the 200 moving average, which is at 3160. Now that's good. You got two bar reversal, also 3080. That's SOS. Would point to 3120 if it does break to the 200-day moving average 3164. That will be good. Things will be coming up, and for our client portfolio we are looking to get some portfolio after Bill's trip, I think next month, middle of next month, for going to Singapore. So at this meantime we are still eyeing a couple of stocks there. We are looking to buy some too. Okay, Singapore definitely is going to move higher, no doubt about it. Okay, quickly comments on the KFCI. Now KLCI here, this is beautiful. I actually will go long. I'm putting my stop loss at 1820. If the break of the 1840, this will come very powerful. It's going to happen on Monday. It tend to gap up, they gap up and start to run, or it gap up, just come back down a bit. Go long at this stage if you have the courage, hold it overnight and let it see how it does on Monday. This is definitely a long for the FKLI. Okay, on the CPO, this wide range bar was a beautiful breakout in here. Market tend to come back in, pull back a bit, sideways moving. done the, let's look at the CPO now. Now CPO was a nice one in here, broke back the 2600 in here. This was a nice 2-bar reversal. We got a nice 5-day line change. Think to go long actually. Go long at this level. Go long at CPO. Okay. If it does break up the around 2610, I think 2610, probably take profit, you know, around at 2660. Okay. Just a short one here. You might see a breakup to the upside in here. Now remember, the next one I will go on is the gold and the ringgit. Ringgit has definitely weakened a lot. I mean, those of my clients who parked their money in SGX definitely benefited. As I said, you know, if you go back the last 10 years, measuring the Sing dollar currency against Malaysia, you got a 5% so-called depreciation of ringgit against Sing dollar. It's always good to park some money in Singapore. Countries, okay, this is where I will go through. Next one is the FX. Okay, so here we have the US dollar against ringgit. Oh, sorry. Okay, so that tells you, you know, we are hitting the old QE tapering. Remember the QE tapering, that the time where foreign funds were leaving? That's the time we actually hit 3.3 side, and now we are at this level. So going forward, hey, this doesn't look good. 3.4 akan datang, my friend. So park some money in Singapore. We might hit 3.4, 3.5. So that's why you can see CPO is going higher. Anytime when the ringgit is weakening, makes CPO prices a bit more attractive compared to the closest competitor, which is the soya oil. So that's what palm oil will do well. We should translate to a better plantation. Okay, a weaker ringgit will tend to hurt because Malaysian being a Malaysian export. So I do think there's some support also for the rubber glove industry, a weakened ringgit in here. So wait for the break at 3.35. Of course, those of you who is going for a holiday, 3.4, 3.5, very expensive for holiday. But for the exporter based like rubber glove and all those plantation, this is good. Now a stronger ringgit tend to hurt the economy of a country. Okay, that's how you see it. Okay, now going back to gold, a nice, you know, what we call a cup and saucer. Okay, we got a nice support here at 12,000 level here. We got a nice breakout at 12,600 levels in here. You know, like it or not, is this news about QE tapering saying there will be another QE tapering coming in as Janet Yellen is coming in. But guess what? Gold is going higher. Now make no mistake again, gold, physical gold prices are in huge demand. As a matter of fact, Bill told me, who is our gold correspondent, said that in China, physical delivery is $200 more than what you see here. So if you want to take physical delivery of gold, will be you have to pay 1,400 level in here. In India, it's about another 100 because there is a shortage of gold. Now remember, production gold prices is at 12,000 in here. So at this level, a lot of gold production prices cannot maintain because of the cost at 1,200 level in here. So there's no incentive for them to produce gold. But there is a huge demand for gold. So technically, if the demand is there, how can gold prices stay low? So it's just, that's what a lot of news, if you read through King's News, KWN King's News, just Google that, you'll see this commodity market is all been manipulated by the central banks in their best interest to keep their currency strong. In this case, with the QE tapering, that's why US dollar will do well this year. Okay? A good bet is actually US dollar in here. So some of you who has a US stock, it's also good too. Don't be too negatively on the US dollar against ringgit. We can do more for our Malaysian ringgit in here. That's all going to be see how this interest rate raise that we have. But I was kind of surprised to see the possible interest rate hike on the second quarter, where our ringgit actually get weakened. Normally when there's an interest rate hike, ringgit will strengthen, but it's not the case in here. Something it's more going out in here, but that one I'll leave it to the economists to come up with it. If I do find new information, I will share with you on the premium subscription. Okay, so we have that one. So we talk about the economics, gold. Okay, the foreign funds. Okay, foreign funds, which is the last topic here. Foreign funds, no good. You can see the rate on the right side That tells you it is still trending on the downtrend. Red is the 5-day moving average, a rollover. We are almost at minus 13 billion, or 1.3 billion on the net selling in there. There hasn't really been buying. If you go as far back to October, every day is so red, except for the last 2 days in 31st of December where foreign funds came in. As I said before earlier on my posting, these were mainly due to Thailand being the situation that they have with all this crisis. I think there's a curfew, right? It's been called martial law. So a lot of foreign funds are leaving it. But problem is they do see a recovery. This is only temporary in Thailand. Now remember, Thailand has been beaten down a lot, so they do see a lot of potential for Thailand, and also valuation. They're much cheaper compared to Malaysia. So they will just wait it out, and once this whole Yingluck versus Street Put, which is the opposition. But again, remember in Thailand for the last the last 42 years, they have 40 coups in the last 42 years of Thailand since they gained independence. So it's almost once every year. Average it out, okay? So it's no big deal over there. Okay, now we're going to review the stocks that we have last week. Let's look at last week was 16th of January. Getronics. Now last week Getronics, we have this nice line change in here. Now if history has any so-called predictive power, we have a 18-day line change also in end of October. The market really moved sideways for almost 1.5 months. Now the same might just go for this one in here. This low was a nice spring here at 323, but it did touch at 329, closer to 325. Who knows? The market will really test before it go further. A lot of time it just congests sideways and break. Now remember Usman, we talked about it earlier. It break, then possible good news coming in here. Getronics is actually, I believe it's a manufacturing play on semiconductors, Getronics, which is similar to Vitrox. Vitrox has broke higher in here. Volume is definitely low, so let's hope this is sign of strength or test in the background. Put your stop loss around maybe $3 or 305. That's what I would do. Things don't move that fast here. Okay, Muhiba, the nice 18-day line change here, took out this $3. He didn't take out $2.70. That was the part. And since then, you've been having a 4-day sell-off. What we see here, 240. Stop loss being 220 in here. Let's again come back to see. Remember, just like MK Land early on, we pick it up sometime in 3 months. It actually congests for 3 months. We finally broke higher. So if you're the conservative side, look for those who pay a dividend. Now some of these stocks have not really gone through whether they pay dividend or not. Use the magic scanner. Look at Mohiba. If they pay a dividend, then you might want to consider holding it longer. Okay. For the PWC stock, which is a penny warrant counter, highly speculative in nature, almost gambling, not for your average guy, but average investor, but you can make a lot of money at the same time. Now Getronics last week, which is we have 5 working days or 3 working days, right? Which is here, 20th, 16 was here, right? This is what we thought we saw. It broke down in here, doesn't look that good in here. Let's say I would give it maybe around 45 cents. We do break, time to exit out for Getronics. Not all trade works, okay? G Mutual, that's right. G, what do they do? G Mutual. Insurance? No. Okay. It might move sideways for a while. I did see the volume in here. Okay. Next one is for the Singapore one. Is NSL. That's right. NSL. Which is what company is that? Is NSL. Okay, let me just bring it up. Yeah, 1, 2, 3, 20th. It did break up, move sideways in here. Nothing much to show off again. Okay, so going next week, which is this 24th of January, we have picked this here, right? First one is this called CB Industry. Okay, CB Industry. It's actually they do build a lot of the milling plants for plantation. Pays a nice dividend in here. Did break up to the new high. Hey, nice one today, you see? 2-bar reversal at just today closing. Okay, so that tells you the story is not over for CBI Industry in here. Still in a nice uptrend in here. I like this. Somehow support did coming towards the end. Okay, another stock we have is multi-purpose capital. finally breaking back to the 200 moving average, trying to conquer the old high at 177 in here. Let's see next week how it does. It might come back and test 142. Alright. For the PWC stock, for some reason I like TRC, which is trading around 55 cents. Did try to break 58 cents. Guess what? Fresh seller came in and said, look, trying to break 200 moving average, let's sell first. And today, on low volume, close back at 54 cents. It's not as well manipulated like AT or XLD. You can see XLD, every day got someone support one, right? Because the sellers has been flushed out, the smart money came and supported, and then finally, I'm not even sure where is XDL today. Let's see XDL today, which is one of PW stock. It's not for the so-called weak heart. If you have a weak heart, no courage, and don't touch this kind of share. Just sit along and watch, just like watching fireworks. Okay. Now 30 cent. Wow, 60 cent, 30 cent. It is 50% loss already. All right. Now from 30 cent to go back to 60 cent, I don't think you ever go back up there again. No more unless the Prime Minister or the Premier China come back again. Okay, fat chance. Okay, this one in here. Once in the 10 years. Okay. So if you miss out, if you got in at 60 cent, the peak was somewhere done in mid-December. Okay, pay note of that. So that's all we have for the closing bell for week ending, 24th of January. So it's a summary in here just to recap. Hey, market. Okay, there's some voice in here. Just want to recap back where we have. We are seeing some sort of test in here. Again, the test need to be really kind of solid in here. The volume is definitely lower than two previous parts. Another test. Now remember, test is always the best because it forms a support at this level is 1800. However, if you have a failed test, meaning the market will close below, then it becomes pushing through demand. A failed test, breaking of the spine, it becomes mushroom on the top, a sell-off, to retest the 200 moving average at 1780, which is possible, right? And at the time, you want to see whether it's a good time to buy. Again, Chinese New Year comes in. We want to see the interaction and the news coming in here. If that falls, next support, which is a 7% down from 1800, will be 17,550 level in here. So I'm doing a lot of projection now to the downside because at this moment, trend is still pointing down. If you go back to my IVSA chart that I post on every Friday in here, it is still red. Okay, so far it's been right. So just wait for it to turn green. Okay, if it turn green, but good news, you have one green already on the right side. That tells you the test. More green, much better off. Okay. So that's all I have, folks, ladies and gentlemen. 4:50. It's time for the weekends. For me as a Chinese, so a lot of cleaning up to do, a lot of spring cleaning up to do. For those of you who is driving back safely, thinking of taking the week off, so drive back safely. You can still catch us on the closing bell, being on the webinar. For those non-Chinese, I wish you a good rest, a good holiday. And if I don't see, there won't be any Friday closing bell or whatever the case is. If I have time, I'll probably do one on Thursday, but then Thursday is 30th day, makan day lah. If I do it, my family member will probably just take the holiday and come back next week. All right. So with that, have a good rest. Thank you for listening and good evening. Bye bye.